We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome and good morning. It's a great Monday morning again. Always glad to be here in Tax Talk for You. Make sure you get over to taxtalkforyou.com. Click subscribe. You can go to our Facebook page, click like and follow. We really appreciate you joining us here. Today we're talking small businesses. So maybe you're just looking to get into business. Maybe you're an owner-operator, trucker, and you're looking to move away from being a W-2 driver and you're just getting started. Or maybe you've been in business for a while. All of these things, information we're going to be providing to you here in this program is going to help you in your business, run your business, maybe stay in compliance in your business so that you don't have, future problems. And so we're talking small business today. And, if you got questions, feel free to send us the questions. We're going to answer those questions as we go through this. But if you're getting out, starting a new business, you need to do a couple of things. And first is decide on the appropriate business entity, whether it's a sole proprietorship, partnership, corporation, S Corp, or LLC, single member, multi-member. You got to establish those structures, and those structures are established within your state. So if you're going to do a corporation or an LLC, you're going to go to the Secretary of State's office in your state and file the paperwork to establish that company, including limited liability companies or limited liability partnerships. Those are all going to be with your Secretary of State's. Sole proprietorship, if you're going to do a DBA, usually it's done, locally. So you would go down to your local tax office usually and get that assumed name. Now, you got your name of your company. Now what? Well, the next step is get that employer identification number. It's kind of like your social security number. So it's an EIN, employer identification number. It is a federal tax identification number that's going to be used to identify your business. Generally, most businesses are going to need an EIN. And you can apply for that, through the IRS site. Or you can file a SS4. You can file online. You can do that. Now, when you're doing that, make sure you're following through with the information that you're getting from the IRS. So, let's say you've established an LLC and you put it in as a one member and you're checking the box that you wanted to be an S Corp. Well, there's more paperwork to file to become an S Corp. Just because you check the box doesn't mean the IRS is designating you as an S Corp. Matter of fact, a letter that they give you will tell you exactly what they're expecting from you and what to file. Read it. Read it. Read it. And if you don't understand it, talk to your tax preparer. Give them a call. Have them interpret and make sure that you're going to be in compliance. Because there's certain boxes when you file that SS4 that's going to make you file payroll forms or file your tax return in a certain way. So if you're an LLC and check multi-member, then it's going to tell you you're going to have to file a 1065, and it'll tell you when your first one is due. If you say you're going to have employees during this first year, they are going to automatically require you to file the payroll tax forms. So, making sure that you've done things right is extremely important. Now, you see, here's the problem. You checked off you're going to have employees, you don't have employees, you don't hire a payroll service, you don't even get in business for 6 months, or you're just getting started, so you needed to establish the company, you needed to get your website going, you needed to get everything else moving before you start really operating this business. So you're dotting your I's and crossing your T's, but you didn't have payroll. The IRS expected payroll forms. Well, now you're late in filing, even if it's a zero return, and the IRS starts charging penalties. Matter of fact, they even assume what your payroll was, and they start charging you interest and penalties on what taxes they're assuming was due. And so now you got to recover from that. You got to get in and then file those zero returns, which waives the taxes, but doesn't waive the penalties. So you've created a problem, and the problem continues to get worse because A, you didn't read the letter, B, you didn't really know what they were asking, or C, you're like a lot of our clients that we bail out of these problems, you had no knowledge that if you didn't have payroll, that you were still required to file the forms. You also didn't know that you had to file additional forms to become an S Corp because you didn't understand what you were reading if you read the letter. So, get some help. That's what we always advise you. Whether it's here, us at Trucker Tax Tools, or, us at Taxation Solutions, Tax Relief, or somebody else that's knowledgeable in your business. You need a good tax advisor to give you good help to save you from what you didn't know about the tax code. That also goes with, filing 1120s or 1120Ss. So you have an entity that you are a corporation. So you have John Doe's Baking Inc., and you filed for your EIN number. The letter came back and said you have to file 1120. Or if you wanted to be an S Corp, you needed to file an 8823 and the 2553 to request S Corp status, which you didn't do. And the IRS says your first return was due March 15th, 2024 or 2025, and you didn't file it because you didn't have any revenue. You didn't really start operating the business. The IRS still requires that return, and you still got to file that return. And now the IRS is assessing penalties. So, knowledge goes a long way. Somebody to help you and guide you to have the right knowledge and the right information is golden, especially when you're running a business. So get the help that you need and let the professional people that have the knowledge in the tax industry guide you every step of the way. Don't get stuck in the mud and minutia of, hey, this is the paperwork, or having to study up to understand the tax code. Go to truckertaxtools.com, especially if you are a trucker. We can help you. We have the knowledge to be able to help keep your life running smooth keep you working. I mean, you as an owner operator, if you're on the road and you're an over-road trucker, last thing you really want to do is to come home and deal with paperwork, or deal with paperwork before you go on the road, or deal with paperwork when you have to stop to rest. You want to be able to, spend time talking to your family, being with your family. And that is what you need to do, as opposed to sitting down and doing all the paperwork that may be required. It's bad enough that, you've got to keep track of everything else that you have going on to venture into dealing with taxes or bookkeeping. And you want to make your life a little bit easier. And that's what we do at Trucker Tax Tools. Now, if you're a W-2 driver over the road and you're looking to actually get out and become an owner operator, to have your own truck, your own business, hey, one of the things that I suggest is OIDA Foundation has a great program that they run. It's about 3 days long, and it's in October, and it's in Blue Springs, Missouri, just down the road from OIDA, Owner Operators Independent Drivers Association, and it's called Truck to Success. So go online, look up Truck to Success, OIDA Foundation, and register to come to that event. I'll be there. I talk about bookkeeping, taxes, lease purchase, entities, the whole works at this seminar. So, make sure you come and join us there. And we're going to take a quick break, and then we're going to continue talking about small businesses and what you need to run your small business to make sure you get started on the right foot. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking small businesses today, but this really applies to all businesses. So as you go through and you're starting your business, you want to make sure that you're doing business, the right way. You're keeping track of the right information. Record keeping, bookkeeping, all becomes very important. Good records, good bookkeeping is going to help you monitor the progress of your business. So when you have financial statements, and you're preparing them, you're going to identify the sources of income. You're going to keep track of your deductible expenses, keep track of your basis in your property, be able to use those to be able to prepare your tax returns. And then it would be supporting the items that you're having on your tax return, both income and the deductible expenses. So, record keeping is important. So develop a system. And whether you're using, Trucker Tax Tools as an owner operator, or you're a small business and you're using us to do your record keeping out there, having a system in place makes life easier. So we have a system that we use for every one of our clients. And our system is really communicated to our clients. we're getting the records that we need from you as our client each and every single month to be able to provide financial statements that are usable in your business. So we're gathering such things as your bank statements, your credit card statements, your cash receipts, even receipts for larger items that you're purchasing, so that we can determine whether these, let's say repairs should be capitalized for like an engine replacement or transmission, or if they should be expensed. If you're buying other equipment, making sure that it's capitalized and depreciated the correct way, tracking your loans even, because you're paying principal and interest. Interest is a tax deduction. Principal is not. It's just a reduction of liability. Making sure that you're finding all the expenses in your business. So, having somebody that can help you or do bookkeeping for you takes the burden off the minutia of day-to-day little things that you get bogged down in, and you can spend the time running your business, identifying the good, the bad, the ugly of your business, and how to make improvements in your business to be successful. So, those kind of things become highly important to you as a business owner. Now, what kind of records should you be keeping as the business owner? So depending on your record keeping system, we always tell our truckers and over the road guys that, hey, you're on the road, best thing to do is have a folder sitting there, or even a box, with folders in it that, you can have a separate folder for fuel, separate folder for maintenance, separate folder for supplies. And you can separate everything there so that you put in the receipts in there. Good way of keeping track of them too is even on your phone, take a picture of the receipt, put it in a file folder by year, by month, and be able to keep track of that as well. You want to make sure that you do have those receipts, but if you're using leased on and you're getting settlement statements, what you're charging on maybe your Comdata card or your fuel card or their card is going to come right off your settlement statement. So we'll be able to deduct that from the settlement statement. But if it's going through your bank account, then, yes, you want to make sure that you've got the receipts and the support and the information that you need in case you would go through an audit. But also, if you're looking at your financials and something seems really out of place or odd, you might be able to go back to those receipts and understand that, hey, there was something different that happened this month that is out of the ordinary. And, part of establishing a business is, talking about budgeting. If you go back to one of our podcasts, Budgeting 101, where we talk about budgeting for both business and personal, if you've come up with a budget for the business, you'll be able to look and help identify trends and what's the difference between what actual expenses you had versus what you were planning, for the future. Now, people always ask me, how long should I keep receipts for? And it's really funny. We just got a text message from Carol asking us, oh, you're right here outside of Houston here. Well, Carol, you asked how long we should keep receipts. Well, that's exactly what we're about to talk about. The length of time you should keep a document depends on the action, expense, or the event that is for that receipt. So you're going to need to keep your records as long as it's needed to prove the income or the deductions on a tax return. So, what we always look at is this, if it's a general expense, you keep those receipts roughly, 5 to 7 years. Now, IRS doesn't usually go back and audit, back more than 2 or 3 years. But keeping those receipts out there for a little bit longer is a good idea. Now, if it's like a truck or a tractor, a fixed asset, you're going to want to keep that receipt from the day you bought it till roughly 3 to 5 years after you've sold it or abandoned it or got rid of it. And what I tell you is on your tax return, make sure whoever's preparing your return gives you the fixed asset depreciation listing. Review that every year with your tax return, because those can get relatively lengthy, especially when you're buying maybe computers or other items out there that are smaller but yet need to be capitalized, and you dispose of them, abandon them, trash them, they become worthless. You don't sell them or anything else, and you want to get them off there. Or maybe you've had vehicles or other equipment that you sell, but your tax preparer never asked the question, do you still have all these assets? And when we do bookkeeping, it's a lot easier to be able to track because we can see when somebody sold it. But we don't know necessarily that you abandoned a computer. Maybe we see you buy a new one, and then we ask, what'd you do with the old one as well, especially if you don't have a lot of employees. Now, if you're like us at Trucker Tax Tools that has numerous employees, when we buy pieces of equipment, we try to make sure that the piece of equipment that it's replaced, come off our fixed asset listing. Unless we're adding a new employee and we bought new equipment for them, then we know that doesn't need to come off. It's just a new piece of equipment. So you want to make sure that you're looking at that fixed asset listing as well. Now, people ask all the time, well, burden of proof. So if I filed my tax return, shouldn't the burden of proof be on the IRS to prove that I was wrong? This is not a court of law. They don't have to prove you guilty of lie, cheat, steal, leaving something off, not reporting income beyond a reasonable doubt. Actually, what they require of you is to prove that you recorded all your income and the expenses were true. IRS, when they go through this audit, IRS is very detailed in their audit, making sure that when they go through and look at your bank statements and add up all the money that was deposited, they match it to the tax return, and it doesn't match. You now have to prove why. So the burden of proof lies on you. You must be able to prove certain elements of expenses or income on your tax return. When you're reporting it, it falls on you. Hey, Carol, thanks for another question. How long should I keep employment tax records? If you have employees, you need to keep these records of employment taxes for at least 4 years. Now, hey, I suggest you keep it back further than that, especially records that may fall back, 6, 7 years. And especially if you have a disgruntled employee, you want to make sure you keep those records a little bit longer so you have the information to support hours and pay for those employees as well. So keep those timesheets, time logs of time that people are working. Hey, when we come back after this break, we're going to talk about hiring the right tax professional for your business. We're going to do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing. But that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. If you got a tax problem, call Taxation Solutions Tax Relief or go to taxationsolutions.net. Let us jump in front of the IRS to deal with the tax problem. It's a simple phone call. It's free. It's a free consultation. No judgment. Just call 888-930-1016. Again, 888-930-1016 or go to taxationsolutions.net for tax relief. Hey, what are you going to be looking for when you hire a tax professional? We get this question, why should we hire you? What makes you different? Versus, somebody, my neighbor maybe recommended that, they always get a refund and stuff. But, what I tell people is, any tax professional with a PTIN number, Preparer Tax Identification Number, is authorized to file and prepare tax returns. But it doesn't make everybody the same. Tax professionals can have different levels of skills, education, expertise, and experience. What you should be looking for is, one, make sure they do have a PTIN number. Make sure they can electronically file. But more than that, I would tell you to find somebody that is an enrolled agent. Now, there are three different groups of people that have unlimited representation rights to represent you to the IRS. You have enrolled agents, you have certified public accountants, and you have attorneys. And we all have rights to practice before the IRS. Anybody that has those credentials can represent their clients on any matter, including audits, payments, collection issues, or even appeals. Only people that are attorneys go into U.S. tax court or have obtained the right via testing to get into U.S. tax court out there. But that is not somebody you need for preparing your tax return or doing your bookkeeping. That is somebody you need is if you actually have a real reason to be going to tax court. If you're just going to tax court to prove a point, don't waste your money or your time. But if you're going to tax court and you have something that is truly supportive, then I suggest you can go to tax court at that point. Enrolled agents like myself, and you'll see EA after my name out there, licensed by the IRS, actually licensed by the U.S. Department of Treasury. And we are subject to suitability check. We go through FBI background check. We had to pass a 3-part special enrollment examination, which was a comprehensive exam that requires us to demonstrate proficiency in federal tax planning, individual, business tax, representation, ethics, and then we've got to maintain at least 72 hours of continuing education every 3 years. So we are all about tax is what enrolled agents are. Representation, planning, preparation. We need to know and do know the tax code inside and out. CPAs, on the other hand, are licensed by the state boards of accountancy, they pass the CPA exam. They've completed a study in accounting at a college or university, may have a master's degree, had met experience and good character requirements, but these are established by the boards of accountancy in each state. And they have to comply with ethical requirements as well, and complete continuing education to maintain their CPA license. Now, CPAs do offer a range of services. Some will specialize in tax and preparation planning. Others are, accountants and, do other things besides tax. So not every CPA is going to be created equal in preparing tax returns. Attorneys, you're licensed by the state courts in the District of Columbia or such as the state bars. Generally, you had to earn a law degree and pass the bar exam. They have continuing education as well and professional character standards as well. But again, attorneys specialize in different fields. Some specialize in tax or tax preparation or planning, and we've had tax attorneys that do work at Taxation Solutions. So there are people that are out there in this industry. But when you're looking at those people, you got to make sure they are specialized in the tax area. Now, there are also some preparers that have limited rights, no representation rights. They have no credentials like we do. They are part of the annual filing season program or participants out there. They don't have to actually prove their knowledge of taxes or tax planning or representation. So you see a lot of these people getting out there and just preparing returns. They can hold a PTIN number, but no professional credentials. So I always tell you, make sure the people that you're working for have the credentials, to have the knowledge to help you better make sure that you're getting every tax deduction allowed by the law, so that you know that you are getting the best tax preparation that there is out there. So, keep those things in mind as you're going through this. You definitely don't want to just use anybody that's there. We represent a lot of people for tax relief and tax problems that was created by somebody that did not know the taxes that's out there. So you're in business, as you're going down your business, you sometimes got to be aware of scams. I mean, you see it in your email, you see it in the phone calls. You have people soliciting, you have people out there trying to scam you out of your money. And as a business owner, you get targeted as well, and you need to protect yourself against that. Last year, our tax community also launched the Coalition Against Scams and Schemes and Threats because of the real big surge in social media scams that are out there. The IRS even has a list of their dirty dozen of tax scams that can affect or do affect you as a business owner. I mean, they have email phishing scams out there that you see tons of email and text scams that are going to be targeting you, both personally and as a business owner. Phishing is an email sent by somebody that's trying to commit fraud, claiming to come from, let's say, the IRS. It lures you in with a variety of, information trying to get information from you. Or the smishing. I always love that term here on the IRS website, is text or smartphone messaging, SMS messaging, where they're often coming with alarming language. Hey, you know, the one we see here is the toll road scam. And our toll road authority doesn't even send out text to collect bills. They've had to go out there and tell people this because people have been going in and paying. I mean, even my daughter, at least once a week, goes, Dad, I keep getting this. Ignore it, block it. It's bogus. So don't fall for those things. The IRS isn't going to text you if you owe money, and they're not going to try to collect from you over an SMS if you owe money, or an email, or even a phone call, unless you've already been on that as well. And we're going to take a short break. When we come back, we're going to continue talking about tax scams, and then we're going to talk a little bit about solving IRS problems as a business owner. And we'll be right back after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Hey, before we get too far, go to taxtalk4u.com, hit subscribe. It's a free subscription to stay up to date. You can see all of our past podcasts and information that'll help you, whether you're in business, whether you're having trouble personally or need help, personal taxes. All the podcasts out there are there to help you if you decide you're going to do it yourself, or maybe you decide, hey, you need help. Taxation Solutions, Tax Relief is there for you to help you. But go to Tax Talk for You, subscribe, like, follow us, join us on social media. We'll answer your questions there, and we'll also answer your questions here during the program, and we'll bring a lot of questions with us that people are asking us over on social media as well. Speaking of social media, you can get bad advice on social media. It's a growing concern in the tax industry because you get bad tax information and people run with it. You as a honest taxpayer can get very easily misled with bad advice, potentially leading to identity theft and tax problems. You got to kind of watch out. We talk about bad advice, not just on social media, but we talk of bad advice, whether it's at the bar talking to somebody, they're going to give you advice on your taxes, or fuel pump advice, or fuel pump bookkeeping, as we would call it sometimes, is only worth what you paid for it, which is nothing. You and your business need somebody that's going to cater and plan for you in your business so that you've got things right. You got to watch out for fake charities. Becomes a consistent problem, especially when you see a crisis or a natural disaster that is stricken. These scammers are going to set up fake organizations to take advantage of your generosity. In the trucking industry, we see a lot of people going after false fuel tax credit claims. It's become prevalent in the last year where, taxpayers have been getting misled into believing they're eligible for certain fuel tax credits, which they may or may not be. It's kind of like the employee retention credit. We saw a lot of people being misled into filing for this employee retention credit, where we told them that they definitely didn't qualify, but yet the company that they were working with, they were getting text messages and they fell for the scam. They paid 20% up front of the savings, now that the IRS has come back and audited them or said that they didn't qualify, they're not getting their 20% back from the company that prepared any of this stuff. Matter of fact, a lot of those companies just faded away into Never Never Land, and there was nothing other than they were responsible for nothing. They didn't even sign the tax returns as the preparer, so it was a bogus credit. There's other social media advice out there that they were talking about some non-existent self-employment tax credits that are out there, and so you've kind of got to watch out what they're doing. Some of the other things we've seen is companies misleading about offers and compromise. So let's go into solving a tax problem. So when you go to solve a tax problem, you have multiple options. You can do an installment agreement, which is going to be full pay over the statute of limitations. You can do a partial pay installment agreement, which means you're only paying part of the debt over the remaining statute of limitations. You could possibly go into non-collectible status if you are insolvent, don't have much assets or much income. You might be able to get into currently non-collectible status. It might get reviewed after a couple of years. Or what you hear promoted on TV, radio, and everything else is this wonderful offer and compromise. The offer and compromise where you're getting rid of all this tax debt for far less than what you owe. Well, that's an important program that helps people settle your federal tax debts when you're unable to pay in full. But there's a lot of large companies out there that are promoting and aggressively promoting offers and compromises. And they try to get you to sign up for it when you clearly are not going to meet the qualifications of an offer and compromise. And then it costs you thousands of dollars. You need to stop and think. Sometimes these companies are going to sell you the ultimate pipe dream of settling this thing for $100, $1,000, and you owe 10, 20, 50, 100,000, $1 million, whatever it is that you owe. And then they say, hey, we can settle this thing for far less. We can get you an offer and compromise. But yet you make plenty of money to pay the debt back, or you have a lot of assets, including your house and the equity in your house, or 401ks or IRAs, or other assets that you may own or possess. Maybe you have multiple vehicles. All this stuff comes in and plays into what the offer and compromise is. But yet they sold you on it, and then they come back and say, oh, well, the IRS denied it. But they knew it all along. So why are you paying for something that they knew all along about settling your tax debt? Now, as a business owner, tax debts vary. I mean, if you're running a C Corp and you're filing 1120 and you may owe taxes, hey, there may be a way to settle your tax debt or get into a partial pay installment agreement. Or maybe you're just going out of business and the debt's going to fade away. Those are items that are possibility. You're an 1120S, S Corp. S Corp does not pay income tax, pays employment taxes. But if you owe employment taxes, whether you're an S Corp, partnership, Inc., DBA, sole proprietorship, those payroll taxes are going to have to be paid. IRS very rarely settles on those payroll taxes because part of that was trust fund, money you withheld from your employee's check. And part of that is the matching portion that the company pays. Now, when you owe both halves, the IRS can come back and hit you with penalties. And it's the trust fund penalty against you personally as an owner of the business or signer on the account. Now, when that happens, they're trying to collect from both you and the business at the same time. So you really need somebody to run interference for you to try to avoid having the trust fund penalties, or to make sure that, hey, when you're establishing a payment plan, that they take into account that both the business and personal are paying on these taxes. But once that trust fund penalties and the trust fund taxes are paid off, you need to get that trust fund penalty removed and taken off the personal side so that you're only paying the remaining taxes on the business. Or better yet, do everything you can to pay off the trust fund portion of those taxes so that you're not hit with the trust fund penalties personally. You also got to watch out for any of your employees who may be signers on the account, and they could be held liable for that as well. We had a client that came to us, and all he was a signee on the bank business account. He didn't make a decision on who got paid or who didn't get paid. That was still done by the owners of the business, but he got held liable for almost $1 million in payroll taxes for trust fund penalties. Crazy. But that's what the IRS was looking at. That's what they were holding him responsible for. Got him off the hook because we could show that he truly wasn't responsible for the trust fund or making the decisions or writing the checks. He only had access enough to the petty cash account to pay for the little office supplies and the little things that were coming into the business to save him money. We had another client, they were operating a bar, and they again had huge trust fund penalties, and they got assessed against his manager as well. We got to be able to prove that the only checks that this person could write were authorized by the owners of the business to pay for the expenses of the bar tab when they were buying the alcohol. And we were able to get it off him. So you've kind of got to watch what you're doing. But settlement is possible. Removing penalties, removing the trust fund penalty against somebody, and you're a business owner or a business manager, is possible as well. If you will, give us a call at Taxation Solutions, 888-930-1016. If you owe money to the IRS, you need somebody to step in for you between you and the IRS. Hey, I always say, thank you for joining us here on Tax Talk for You. Make sure you get over, like, share it with your friends. We want the information out, and any questions you have, please, you can send them over to us at Tax Talk for You, and then we will get these questions answered on air. We're here every Monday, 10 a.m. Eastern time, right here in W4CY Radio, Talk for You TV. You can also catch all our podcasts again at taxtalk4u.com. You can catch them over on YouTube as well. And then we try to post it up on all the social media out there. And again, if you got questions, head over to social media, post the questions over there. We'll answer them. Other people have the questions as well. So we want to get the information out. We want to help you. If you need help solving a tax problem that you want to do it yourself, send us the questions. We'll answer them right here on the show for you. Again, it's taxtalk4u.com, W4CY Radio, every Monday, 10 a.m. Eastern Time. Again, 10 a.m. Eastern Time. But go to taxtalk4u.com, like, subscribe, never miss an episode. And we'll see you next week. Have a God bless and glorious week this week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.